What is up, guys? Welcome back to the channel. Welcome back for another live stream. My name is Pat. This is Crypto Unhyped, the one channel where we focus on data and not drama. If you get some value out of this stream and if you enjoy it, and you're new to the channel, then consider joining us here in Team Crypto Unhyped by hitting the subscribe button. And for everyone watching, help me out with the algorithm by smashing up that like button. And guys, we got some good news. We had some results here from the US has been selling off debt. The Treasury Notes, they have been sold off, the 2-year ones, and 66 billion of them. And they were accepted at extremely low interest rates. I will get into that in a second. We'll get into the charts where the key level right now, testing resistance, which we spoke about yesterday, an absolutely massive level on the 4-hourly chart. If we can crack that, then we're on our path here to test the pivot point to reverse the bearish trend into a bullish trend on the 4-hourly chart. And then of course it becomes more interesting on the daily chart and so on. We'll cover all the levels. We get into, of course, the new data sheet that was released today. It's already live right now. You can see it in the chat. You can see it in the description and across all my social media platforms. If you just click on the link, you get access to it for free. It will be sent directly to your email address. And yeah, guys, thanks for joining me here in the Crypto Unhyped headquarters in beautiful sunny well, not sunny, it's pitch black actually, but nonetheless beautiful Marbella, Spain. And yeah, we got a lot to cover, so just wanted to get some time in here so some of you can join me here. And also, of course, warm welcome to everyone watching over on X. I've been streaming over there for the last few days, so if you're more active on that platform, and you can watch the streams over there as well. And of course on YouTube, if you want to get involved, that's the chat that I can see. So if you want to engage with me a little bit during the stream, then make sure to watch it over on YouTube. Guys, let's get into it now. Let's start off with the data now, and then we get into the charts at the end. And there's some really interesting stuff happening right now. So make sure you stick around all the way until the end. And if you missed anything, of course, the stream will be on demand right after I wrap it up here. Okay, guys, now let me just prepare some stuff here. And yeah, guys, let's get into it. All right, let's start out here with, you can see here the figures displayed in the calendar represent the yield on the Treasury Note auction. So usually when notes get auctioned at a lower rate, that's a very good sign, because it means there's demand for those notes. And what it means is that basically the investors or the buyers of these notes are expecting a better monetary policy, aka rate cuts. And that is of course a very good sign for risk assets, that of course the odds for rate cuts are going up. We see some positivity. Of course, that is giving us a bit of tailwind right now, and we can see it in the price action as well. Right after this was released, we had a big push. But tomorrow we still got the 5-year and then the 7-year note auctions in the next 2 coming days. And that's not happening on its own. There's a lot of stuff going on in the next 2 days. Right before Thanksgiving, the markets, of course, are closed. So there's, of course, always the fear for an absolute risk off moment that people exit their positions, and a great chance for bears to press the price lower. So in order for that not to happen, and of course we want some good results from everything that's coming out tomorrow, and as we spoke about yesterday, we want to reclaim key support at least on the 4-hourly chart to sit safe on that level while everyone's celebrating Thanksgiving and we head into the weekend right after that. So here's the new data sheet, which I released today. And here we can see on the macro data to watch, the core US data that's coming out this week is of course the retail sales. That's the delayed data from September. As we spoke about before, the Bureau of Labor has canceled all the data for October. So we won't get PPI, CPI, retail sales, all that for October. And therefore we're still kind of flying blind. But there's also been some releases that CPI for November will be released on the exact same day when the FOMC rate decision takes place. So some good stuff is developing right now. Of course, also the 2-year, 5-year, 7-year is going to be, if it comes out all bullish as it did today, then that's of course also a very good sign for the Fed to lower the rates. So we got to keep our eyes out for that. By the way, guys, I need to make sure I sit here correctly. I've just realized I was sitting next to the camera. But yeah, guys, then of course we have PPI, also delayed data from September, and then CB consumer confidence, that's also coming out on Tuesday. That's the current data. And then the GDP annualized, the second estimate, coming out on Wednesday, as well as the core PCE price index. Of course, a very strong gauge for the Fed for rate decisions. So that's all lining up with the 2-year, 5-year, 7-year notes, and therefore a very, very strong potential for volatility. And then, of course, since we are expecting extreme risk off on Thursday when traditional markets are closed, then that, of course, is dangerous. If that data comes out more bearish than expected, then we can, of course, expect a huge push to the downside again to at least try and revisit the lows. We'll get into all the key levels, also, of course, what the key support right below is. And if you want to have a complete look at this data sheet and all my key price levels here for the weekly, monthly, and daily chart as of today, then you can download this in the description right now. You can see it actually in the chat and yeah, in the description and across all my social media. So we have this out of the way, positive news, and now of course I keep you updated on everything over on X as well. This is where you can catch my streams. You can also catch my short-term updates. I'm getting way more active across all the platforms now. These good news, of course, had a strong impact already. This actually has been the case the whole day, that the cut by 25 basis points, the odds for it on Polymarket have gone back up to 75%. So of course, very bullish here. The outlook now into December again, to that rate cut date on, or potential rate cuts to that date on December 10th, when the Fed takes the decision about it at the FOMC. Now what's not so looking so well, it's looking less inflows, less open interest, sorry, than we had in a long time here. The less open interest than we had all the way in April this year. And that is, of course, now flattening out here. The price is low, open interest is low. That's a very strong indicator for a at least short-term bottom here for Bitcoin, as well as far as the ETF, futures open interest goes. And yeah, guys, we got to keep our eyes out for this as well. If this starts flipping now, if the price starts moving up and we see that open interest starts picking up, then of course, very bullish sign here as well. Then here we can see also that we are approaching a key level here as far as the liquidation heat map goes, right in the $88,600 range. This here needs to be updated. This is from earlier still today. We're actually right at the resistance right now here from a liquidation standpoint, right? Right at $88,000. And that's, of course, a key level that we already looked at in the charts in the last couple of days. And then if we look at ETF outflows for last week, then we can see that this here has been minus $1.2 billion went out of the market last week. And we had now 4 consecutive weeks of negative outflows. The last time it happened that we had 4 in a row was here, where we had 5 in a row back in, when was this? Here in yeah, February, earlier this year, between February and March. So of course we know that then after that the Bitcoin price bottomed out and went on a huge rally after that. So if that lines up now, then of course, or if it plays out the same way again, then we exactly know where to look at, where the key levels are that are resistance right now. And of course I mapped it all out for you already here in the data sheet. So if you want to sit back and relax and just look at my overall take here on the market, then just download it. And yeah, read the data sheet, guys. Now let's get into the charts. For that, I need to just change the screen. Here we go. And we're starting out not on the weekly chart as per usual, not on the largest time frame, as we have to pick up where the action is right now. And that is, of course, that key underside test here. We can see the light blue moving average right above us. That's the 50 EMA here on the 4-hourly chart. We have not touched that here since Thursday, November 13th. So since 2 weeks, we have been trading below the 50 EMA here on the 4-hourly chart. That is in perfect alignment here. You can see we're just poking over the 61.8 on the retracement here from that high to the current low. And there we also see that previous range low here on a closing basis, right at 88,800. So that's the key range that we want to reclaim here, the 50 EMA and that previous low here, which of course now is resistance. Strong prior support usually flips into strong resistance when we test it on the way up again. And if we can reclaim that, then of course a very strong bullish outlook here, that we are approaching the pivot point here on the 4-hourly chart, where of course by definition we want to always break the prior high in a downtrend to get a trend reversal, right? We've been printing lower highs and lower lows here until this point. Now locally we started here printing higher highs and higher lows, and to reverse this 4-hour trend here, we want to get over the previous high in this downtrend here and start printing higher highs and higher lows, and then by definition we have a trend reversal. Of course, that's not all we need on the 4-hourly chart. That's only the first step towards flipping bullish again on the larger time frames. And then we see here, once we break above 92,500 bucks roughly, that's when we start flipping bullish. But then we also start testing here the underside of that diagonal support, previous diagonal support line, that we can then expect also to be very strong resistance. And then when we get into the 100K area, that's where it gets really interesting. That's when we start approaching very, very important stuff on the larger time frames, such as the daily chart and so on. We'll get into that in a second, but just to make it clear here again, one sec, here we go, that we need to break this level here right now, 88,800 on a 4-hourly closing basis. If we get above there, then of course we have a shot here at the 92,500 level. If we can confirm above there on a 4-hourly closing basis, then of course we have a shot to test the underside on the daily chart, and then it becomes really interesting. So let's go over to the daily chart now. Just one more thing here for volume. You can see also how flat volume has been here, especially if you look at the bullish candles, the white volume bars down here, very flat, increasing bearish volume. Now of course we had this massive bullish volume spike here, which we also saw on the daily chart. Of course that looked bearish, but I broke it down yesterday for you guys why you can look at that as a massive bullish volume spike actually. And there we can see after that bearish volume started flattening out, and actually bullish volume is now picking up. So very, very strong sign here that that massive candle right now that's testing resistance is of course coming with a strong volume support. On a diagonal perspective here locally, we can see that we had a breakout. We see here this trend line connecting all the tops in this downtrend here. Yesterday we've been trading below it, or today actually as well. And then here we put in this hammer where we tested the 38.2 on the Fibonacci retracement from this downtrend here, and now poked above the 61.8, which of course has a strong hit rate once we get back over the 38.2. And now you guys know what to do here, or what we need to do. 88,800 is the number for now. Now let's get over to the daily chart. The daily chart here, we can see right now massive volume. Of course, we had here on this hammer. This is what I was telling you guys. There you have to look at this candle in a bullish way. Obviously, it's purple. It looks bearish, but the volume represents the price action in that candle here that was mostly bullish. Therefore, a very strong reversal pattern here, and that's where it gets interesting on this chart. So if we look at the underside now from that prior range that I was talking about, that's right at $100,000, $101,000 actually, perfectly aligned with the 4-hour 200 EMA. Therefore, a very strong cluster in that area. And then of course above there we also see the 50 daily EMA, which is still turning down. So by the time we get there, we can expect that to line up in that area as well. And then from a broader perspective, of course, we have a lower high, lower low structure here as well. And the diagonal trend line, the dynamic trend line, resistance line is also in that area. So that area here between $101,000 and $103,000 is very strong resistance. If we can reclaim that at support, then we have the same thing that we are trying to do now on the 4-hourly chart, where we need to flip 88,800 to reclaim support there and then get up to the pivot point. And there we see here the pivot point on the daily chart to flip this bearish structure bullish again is here right at $106,000, almost on the cent. And there we see also the 200 EMA here on the daily chart. So another very strong cluster that we need to break to then flip bullish here on the daily chart. If that on a closing basis then drifts over into the weekly chart, then of course this is absolutely unheard of almost, because as we know, the 50-week SMA, usually when we start closing below it after we put in new all-time highs, then that's usually 100% confirmation that we're going down to a bear market lows. If we now start closing back above it on a weekly closing basis and then reclaim it as support, then of course it looks like that we have a chance to go back up to test the highs. But of course, then we need to keep our eyes on the price action if that gets followed up with more bullish candles, and also if it's volume supported. And then of course we can break that rule, which I spoke about in the past, that nothing is forever, right? This has a 100% hit rate so far, but we're looking at a very young asset. Let's actually get over there to the weekly chart and break it down quickly. And there we see that, of course, we closed here and confirmed with a follow-up candle here below the 50-week SMA. And historically, we tracked it back many times here over the years on this channel. And we've seen this year alone, I already started speaking about it in the beginning of the year, that when that's the case, then that's, of course, the 100% confirmation that this is over, that we're not continuing in this bull market. But eventually that will change as well, and there will be a time where we then close back above the 50-week SMA and continue in our bull market after we close below it. So that's the area where it gets interested. And then if we look at this massive cluster here, right, we have a bunch of Fibonacci retracements here. Ignore this smaller one. This is coming from a smaller time frame, but we see this one here where we're retracing from the low in April to the current all-time high. There we see that the 50 lines up in that area with the prior support also of this trend line here, the dynamic trend line. Then of course the 50-week SMA right there, and that key horizontal level here where we're connecting the tops from December last year, January this year, and then also here the lows from back in June, right? So very, very strong area, and that's where it gets interesting then. And that lines up across the time frames. We saw the 200 on the 4-hourly there. We saw the 50 EMA on the daily chart there. We saw that that's the key level that we want to reclaim as support there as well. And then everything here on the weekly chart lining up there as well. No man's land, I called it in the title, as you could see probably, guys, or in the thumbnail, because we're basically hanging on to only these two Fibonacci levels. We can draw a trend line here, of course, from the tops here from 2021, then connected with this range here and these lows here, and then we get another support line there. But realistically, from anything that's happening in this current cycle here, this is the only support we're getting, these two Fibonacci levels here and that range. And that's really key now, because the only chart where we still are bullish here from the time frames that we're looking at, right, is the monthly chart. So monthly chart, 2-week chart, they're still bullish. Anything below that is bearish. So we're trying to, of course, especially on a closing basis, stay above the prior low here. And for that, ideally, we want to get back above the trend line as well. We're connecting the bodies here to have a bit of an idea of, on a closing basis, where we want to be, and that's right around $96,000. Then we are, of course, at the underside, close to the underside of the daily chart, and a very key resistance area. And if we can reclaim this here as support, then that's of course a massive candlestick pattern here that could form on the monthly chart and give us another shot to get back up here and test the 8-year resistance one more time. No guarantees for anything. Of course, we got to be ready for all the different scenarios that are on the table, and we got to keep our eyes out for these catalyst events that are taking place this week. Of course, a lot of stuff happening at the same time, and we're catching up to the data. And it's also good news that we getting all this data before the Fed has the rate decision in December. Otherwise, they would be flying completely blind, and then they would probably have to play it safe and just stick to the current rates and not give us any rate cuts. Now, this has always been the bullish scenario that I've been speaking about here on the channel. Also, my first video back here a couple of weeks ago when I spoke to you guys about why I'm still so bullish. And that is, of course, if we look at the entire cycle until this point, I spoke about it many times here actually on the channel, it's all based on institutional investors, which we see in the crypto markets for the very first time really in this cycle, like at least on that scale, and all the ETFs and everything. So that was the fuel for the bull market. It was not the retail as it usually is, where we go into massive alt seasons and stuff. These institutions and governments, they're just not buying these meme coins and these shit coins on Phantom Wallet and stuff. They're sticking to stuff that is solid, the legit stuff that's has proven itself over time in the market, and therefore we can't expect an alt season. But that's what I'm getting to, is that was my reasoning for also that alt season, and the real bull market has not even started yet. And of course, things are shifting, not only in the market structure, also how the market behaves, how the money shifts from one into another, right? Back in the days, it used to be like you go out of stables, you go into Bitcoin, and then when Bitcoin's breaking resistance, you just blindly go into altcoins and celebrate alt season. That's just not the case anymore. There's bigger players in the market now, and we got to be more careful. And I also speak to it a lot to people I talk to about trading, right? It's a completely different game. You have to be very careful, especially over the last 2-3 years. Really, before this year, it was like shooting fish in a barrel trading these markets. And now it's much more complicated. You have to be a lot more careful with confirmation and really take things into consideration before entering a trade. By the way, guys, have to mention, as always, this is not financial advice, purely for educational and entertainment purposes. Always do your own research. But yeah, guys, market structure has shifted. Everything is looking different currently. And we have to expect that this will continue for a while now. And before the retail doesn't get a real reason to enter the market and a sign from the economy that the market is safe to enter, we cannot expect alt season, right? We cannot even... for now, we look at it as if it was cancelled this cycle, but this cycle has been fully driven by governments and institutions. So when the retail gets favorable conditions again to enter the market and to borrow money at lower rates, then of course it becomes interesting again, and then we can start looking at altcoins again. And for that, the interesting thing that's taken place is of course that quantitative easing is starting in December. But you have to also look at that as like a lagging indicator. It's not going to be quantitative easing starts, the money printers go on, and we continue, and we're going to go right away and start rallying to new all-time highs and stuff. It's going to take time. And first things that we need to see is, of course, more rate cuts. We need to see rate cuts in December. Then we want to see the Fed continue cutting rates, and that is going to give the tailwind to the retail then, and the confidence to the retail to enter the market and to start buying altcoins, which, of course, institutional investors are not buying. So this is what we're waiting for, and I'm going to get into a lot of charts here. You can see it on the side here. Let me just go back. You can see here I have a lot of stuff that I want to cover with you guys. I will publish my schedule tomorrow morning, so you know exactly what to expect this week, and then you will also get an idea of what the weekly schedule will look like in the future. I already told you guys we're doing Sunday to Thursday for now. Friday, Saturday I take off from streaming, but nonetheless I will be publishing videos and more short form content, and also a lot of educational content on these days. But we'll get into all these charts that you can see here, everything from all these Bitcoin charts, then total market cap charts, dominance charts, ETH BTC, Sol ETH. Then we have here, of course, the very interesting chart that is also looking very bullish right now, the spend output profit ratio for Bitcoin, which of course shows us now that sellers are currently selling in profit, which is of course bullish after we've been sitting here the last weeks. Actually, we've been sitting in an area where the average seller was selling at a loss. And then here we have a lot of course, macro headwinds to look at, such as Dixie, and we have gold. We have a lot of other different charts that I will cover with you guys that give us a really strong idea of where we are at, not only in the crypto markets and for Bitcoin, but overall in the economy, and when the conditions are fair for risk assets really to start pumping again. So yeah, guys, that's basically it here. I just wanted to cover the key levels for today and the data that you need to look out for. And tomorrow I'm back. Tomorrow we're going live right before the... I actually don't know. I have to check it, but I will update you over next. So guys, of course, make sure to follow over there. This is where you stay up to date, not only with my analysis, but with everything I do in and around crypto. So you can always stay up to date with my latest stuff. Right, guys. Let's wrap it up. This is it for me for today. Hope you enjoyed the analysis. I hope you enjoyed the stream, especially if you're new to the channel here. Very, very warm welcome. I hope you consider to join us here and to come back for future streams tomorrow. Then we're back Wednesday, Thursday, and then Friday I got a special little something for you guys. Not a stream, but a video. So keep your eyes out for that. And guys, now I'm out of here. And as always, happy trading. See you soon.